Hello, trading is closed on January 12th, 2023. Let's start with our disclaimer. It's my trading plan for tomorrow, January 13th. Remember, I can be wrong. Any trade you make should be at your own risk. I have personal business this evening. I'm not going to have as much time to do my analysis or to do this video, but let's see what we have. We looked for the pattern with the early high, which is this, and tomorrow should have the early low. I said if we continued higher, we should run into trendline resistance and a declining 200-day moving average. That's what we did. We gapped up, hit higher highs, closed under these highs. It's a negative pattern. If we don't gap tomorrow and promptly overtake these highs, we should see lower prices regardless of how we close. This is the close. This is a prior FOMC announcement price, which offers resistance. There's additional resistance from that price. During the day, MEJT gave a buy signal. Just means there's a higher target. The target was to overtake the early highs. When that printed, the system said it wouldn't stick and that we would retrace to this line, which we did. It said this move also won't stick, gives us a target of 39.6386, and if we don't gap up smartly, that's my call for tomorrow, about 20 handles under where we closed. So we have targets of 39.6386, along with other recent targets, just over 38.99, 38.69. A month ago, we broke through this upsloping trend line in a straight line. I said my rules call for us to return to the line. That happened today. When you return to the target, that's resistance. Either you gap over resistance or resistance wins. That was my last higher unsatisfied target from earlier patterns. We have rallied into a declining 200-day moving average. That's a rally killer. Either here or pretty close to here should be the end of the move. And if wave red C is equal to wave red A, takes us to around the 3650s. Once again, I have personal business, don't have much time to do this, but let's go over it. Friday's pattern has the early low, it could still gap up. Today's pattern should have been a rally into the close or a straight line drop, and it wasn't. The situation should be resolved at tomorrow's open, either by gapping and promptly overtaking today's high or by dropping sharply, ideally by gapping down. We gapped up, hit a higher high, but closed under intraday highs. It's negative. Unless we gap and overtake the high a day, we should print lower prices tomorrow, regardless of how we close. The volatility index dropped to as low as 1883, and it closed under its lower Bollinger Band. It's a sentiment indicator. It means people aren't willing to pay up for puts, not willing to pay much premium for puts. SPX is at resistance from its declining 200-day moving average and from the green trend line I've shown since last month. I've got no accurate way to predict if we are going to gap up and promptly overtake today's high on Friday, but if we don't, the elements are there for a very steep drop to begin. Now again, we gap up here, the whole idea is killed. That's my standard rule. But today's pattern should have either closed at the high or have a straight line drop. And if we get the straight line drop, which I think is very, very likely because of the lower target and meeting all the higher price objectives and having all these lower targets, this can be just about as negative as it gets, assuming we get the big move down from the open, which we aren't going to know until tomorrow. Tomorrow has the early low. It could be the start of a straight line decline in spades. And that's today's call.